What's going on, everybody? Want to be our summary of markets. I apologize for this being a day late and so late in the day. I've been really busy lately. I'm trying my best. I do apologize. This week is pretty active. We have a lot of stuff going on pretty much every single day. So Tuesday, we're going to have the 10-year bond auction. That is going to be very high impact at 1 p.m., so watch out for that. Wednesday, obviously, very, very big day. FOMC, and not just an FOMC. It is the FOMC where they give us their economic projections. So probably the biggest FOMC of the year so far. We're not looking at a rate cut. We're not looking at a rate hike. We're just looking at those economic projections coming out. And then we have that press conference at 2:30. But even before the FOMC, we have CPI data coming out at 8:30. And crude oil inventories at 10:30. So a lot of stuff happening in the morning as well. On Thursday, we have core PPI data at 8:30, unemployment claims as well. Moving on to 12 o'clock, we have Yellen speaking. And then in the afternoon at 1 p.m., we have the 30-year bond auction. So the bond auctions this week are the 10-year and 30-year, which are the highest impact. Make sure to watch out for those. On Friday, we have consumer sentiment and inflation numbers coming out at 10 a.m. So very, very active week. And not just that, on Friday is when the rollover begins as well. So the rollover for the next contract will start on Friday, and it will be expired on the Friday after that. Typically, we roll over around Sunday to Monday. So that's going to be next week. All right, moving on to our weekly trade plan. We're going to start off by looking at last week's trade plan. So ES hit, I believe, our first target. We hit our target around 68. We did not hit our target around 5,400. So you started out the week pretty strong. You started to push into that value gap, and then you had a really strong day on Wednesday. And then you started to hit our targets pretty quickly. But after that, you really just kind of balanced out, and we're building up a micro pullback range on this high here. So really strong POC on the weekly candle. Kind of still just playing out around that POC. Moving on to NASDAQ. Same thing with NASDAQ. We hit our first weekly target around 19,023. We were not able to hit our second target. So you kind of traded inside that bull trap zone for the first 2 days. You were not able to break above that 752 level. It was actually the high, damn near to the exact point on Monday and Tuesday. But then on Wednesday, we had that very strong candle, pushed up, shifted the POC higher, and now once again, we're kind of building up that POC node as a micro pullback. Haven't really found any value outside of it. All right, moving on to our new trade plan for ES. We need to stay above 82 to look bullish. Our first target is just above that. This is kind of that weak high zone. So we could break out, form a weak high, and then start to pull back. So if you are going to form a weak high, it's most likely going to be in this zone right here, around that 5,400 to 5,410. If we can look very bullish above that with some very strong data, either tomorrow or Wednesday, our main bullish target would be around 5,460 to around 5,480. To the downside, if we stay below 5,350, we're going to look for that value retrace of last week. That's going to go down to 93. That's a drop of about 1%. And then our second target would be down here on this second value retrace. I think I actually need to fix this a little bit. Let me see here. There we go. That second value retrace would go down to 52.20 to 52.15. The very bearish target, if it just nukes on the FOMC or the bond auctions, would be that next value retrace around 51.90. And then the most bullish target, if you just go straight up on all the data coming out, I'd look for around 5,500. It's unlikely, but just keep an eye on it. All right, moving on to NASDAQ. Pretty much the same thing. So we're looking for that all-time high to break. The weak high zone is going to be right there around 19,300. That's going to be an increase of about 1%. Second bullish target would be a Fibonacci sell zone around 450 to 550. And then the extended target would be another Fibonacci sell zone around that 880 to 20,000. It's kind of crazy how close we are to 20K, but we could be there within a week or two. So bearish targets holding below 980. You want to look for that first value retrace into 650, and then you have a second value retrace down to 18,250 up to 400. All right, moving on to Bitcoin here. Our levels have not changed on Bitcoin because you're just chopping out for the past month or so. We have that kind of distribution going on here. We need to stay above 70,200 to break out of that D-shaped profile. We would be looking for 73.3 if it does break out to the upside. If we stay below the value low around 67,000, we're going to be looking for 65.5, possibly 63,000. Same thing on oil. Our levels have not changed. We did hit both of our bearish targets, the buyer demand zones. So we could get rid of these zones. They have been hit, but pretty much the support zones are going to be about the same. So if we wanted to find a support zone to the downside here for another bearish target, it would be basically this candle right here, kind of like an order block almost. We want to see if there is any demand around that area. So possibly anywhere from 74 down to 72.40. You would have to reject this anchored VWAP here, reject this 77 level, and then you're most likely looking for that low, possibly a higher low or a double bottom. If we stay above this anchored VWAP, we want to complete this value retrace back above, let's say 79 to 80. And then our next target would be that anchored VWAP from that recent high, which is around 80.50. Okay, looking at gold here, the distribution that we were currently in, or that we were in before, that was back around late April, we have fully retraced that D-shaped balance. So the next main target to the downside would be 2270, that anchored VWAP. So keep an eye on that. We have completely given up this Fibonacci level here. Typically, you want to hold above that 618 if we want to continue that fib, but that has been broken. So we'll go ahead and get rid of that. So right now what we're looking at is kind of a head and shoulders. We have this lower high right here, which is kind of right around that first high. So that does form a bit of a head and shoulders here. So just keep an eye on this lower low and lower high structure. We have a little bit of a downtrend forming here. So if we do break this 2300 level, look for that 2270. That's a very old anchored VWAP from this prior low. You do not want to trade below that level. If you trade below this anchored VWAP, you're probably looking for lower liquidity, which would be way down here around 2150. If it holds this bounce, look for that high. You want to break this little downtrend that we're in. We have those lower highs and lower lows, so we need to break out of that channel. So you would want to look for around 2410 or higher. Okay, last but not least, the dollar. The dollar has not changed really any of its structure the last few weeks. We're still looking at holding above 105, looking for that 106 target, possibly 106.6 to 107. That would fill in that prior gap. If we stay below 105, there's a little bit of support at 104, which we just bounced out of last week. If we break that 104, it's looking pretty bullish for indexes, pretty bearish for the dollar. There is absolutely no correlation right now, so we can't really use this in our trading unless the correlation snaps back during the data releases later this week. But all right, guys, that was the summary markets. Once again, I do apologize for how late it was. Hopefully you guys enjoyed this video. I'll see you guys during our next live stream tomorrow. Have a good rest of your night.